episode of CashTalk. And today I'm being joined by Ian Boda, a ESG specialist at Vanguard Australia. Now, Ian is responsible for developing and implementing Vanguard's active strategy and connecting portfolio construction solutions with financial advisors across Australia. In addition to managing growth and building relationships with Vanguard's active clients, obviously having a strong tilt towards ESG. Okay, Vanguard is one of the largest asset managing companies in the world, managing over $7 trillion in assets. That's mind-blowing every time I say that. They are renowned for their simple but effective low-cost index approach, which was founded by the late world-famous John C. Bogle. And in the investing world, if you haven't heard of Vanguard, I do not know what rock you're hiding under. But Ian, thank you very much for joining me today.
Thanks for having me, John. Much appreciated.
That's it, mate. That's it. So, mate, before we get started into ESGs and investing and all of that stuff, just tell me a little bit about, yourself. How did you get into the world of this kind of investing world? And, why do you still love what you do?
No, definitely. Mate, John, I started, which makes me feel old when we talk about millennials and everything else. I started in 2005, working for, a wealth management company that was part of a bank up here in Brisbane. So I'm based in sunny Queensland. And during that time, I've sort of sat on three sides of the fence. I've sat as a, administrator, doing, superannuation applications. I've done relationship management where I used to look after advisors and the like myself. And also got to sit on the fence as a financial advisor and do that for a few years with the bank too. And then what really probably got me was trying to work for the right firm that I knew could, meant that if you invested in their products, that the client was going to be better off in the future. And that's where I found myself at Vanguard just over 10 years ago now. And since then I've, helped advisors, clients, met lots of end clients, help them essentially just build wealth and reach their, along with their advisor, reach their financial retirement goals.
Yeah, awesome, man. Awesome. And to obviously be, 10 years with Vanguard, obviously it's a really good, and a good tenure these days to be with Vanguard. And, from an advisor's perspective, they've been doing great things for a long, long time. So, it'd be good to hear, a little bit more about what you guys are doing and particularly, and why I got you on today. So, there's been a lot of talk about the ESG investing and some people saying it is going to be the way of the future, not maybe the way of the future. But what I want to kind of tap into today is first and foremost, actually, what is ESG? For the people that it might mean different things to different people, and if you can just unpack that for us.
No, definitely. I think we definitely should start there because ESG stands for, just so everyone knows, environmental, social, and governance. People might think it's ethical or sustainable. These are all other umbrella terms that you sort of hear, but really ESG investing refers to the inclusion of environmental, social, and governance factors into one or more parts of the investment process or the product design. So if we think about what environmental, when I say that, that's companies or industries that manage their impact on the environment. So it could be thinking things about climate change, could be thinking things about deforestation, pollution, waste management, just anything to do with the environment. Social would be, how does a company or industry manage its impact on society? So thinking things like how do they treat employees? What about supply chains, community engagement, health and safety, those type of things. And then governance, which is probably, might sound like the most boring, but it's probably one of the more important ones is, does the company have good business practices? So thinking about diversity, right, on a company's leadership team or board, executive pay, and are they paying the right amount of tax, not trying to sort of cheat the system and things like that. So that's, I guess it's probably the easiest way to broadly talk about what is ESG.
And obviously, from you saying that, from a company's perspective, I can see why a lot of big name companies, especially, are trying to fit within this mold as well, too. Not just trying to kind of be nice citizens, social citizens, but you can also see from an investment perspective, a lot of those things that you were saying in there, a lot of companies have started to tilt with that. And we talk about, for example, making sure there's a, gender diverse board, for example, making sure that they are paying their fair bit in taxes. They're making sure, I would imagine, that they're going through everything in their business to try and make sure that they're seen as good corporate citizens. And that, for me, that shows the sheer weight of the interest as well too, from an investment perspective, because obviously a lot of these companies do care about their share price, and the value of the business. But for me, from an outside looking in, you can see that it's actually having effects even on the ground.
Yeah, correct. I think everyone wants to do good, which means doing well in the future. And it's not just about risk and return anymore. There's risk, return, real world impact. You hear this term, purpose-driven capital, all those type of areas. I think people are just, wanting to make sure their capital is being put to good work and not obviously hurt anyone in the future.
So from the sounds of it also as well too, from say like an investment manager's perspective, there would be like different levels of ESG. So is there like different approaches or different like levels, or how does it go? Because how far do you go with this?
Yeah, I mean, well, maybe before I guess talk about those levels, like what about, what does it mean to invest sustainably?
Yeah.
Might be a better way to start. Yeah.
Okay, cool. Because one thing that went to my head is like, there's so many different options. How deep do you go in? But what does that mean? Yeah. Let's start there.
Yeah, let's start. So I think, because ultimately sustainability will mean different things to different investors, right? And I think it's a central point about ESG is that, there's so many umbrella terms of sustainable, responsible investing, and there's essentially a diverse spectrum of issues that are important to people in different ways. And I guess across these issues, there's there's investor values and goals that might be more important when it comes to an investment decision as such. So for many people, the sustainable investing relates specifically to investments that might consider environmental outcomes only. So example being before like carbon emissions, along with investment outcomes. So that's a big part. I think the growth and demand for ESG is probably might help them sort of get to that question that you're after. But I know you sort of look after younger clients or the millennials as such, and when you look at reports, there's more than $3.9 trillion of wealth that's going to be transferred over the next 20 years, right? Primarily from baby boomers to Gen X and Gen Y, and probably Gen Z, that other one that you just right. And that estimate is like apparently going up by about 7% a year. Yeah. So I guess there's these new generations. I think I'm X is to go, right? And look for ways to manage their wealth. ESG is becoming more and more important. And what, probably just two things I'm interested in is that, there's plenty of statistics out there, but the Responsible Investment Association of Australasia released their Values to Riches report a couple of weeks ago or a month ago. And they essentially said that like there's 2/3 of Australians don't invest in ethical funds or could do so in the next 5 years. So, it's growing. And I think the big one, it was 3 out of 4 Australians would consider moving, right, there to another provider if they found out their fund was investing in companies engaged with with activities that were inconsistent with their values. So, there's this large drive. Sustainability means something different to everyone else, and it's just essentially becoming a core consideration really for everyone as they look to, and as you engage with them, John, to reach retirement and goals.
And it's just so moving on from that, because I think this does lead on to that question that I had before in regards to how deep and does it go. It's like when we think about ESG investing, it's like two things. It's like, the way that I would explain it is like, am I hardcore at it? Like, is it like a non-negotiable? Yeah. Or is it just like a nice to have? And that's one thing that comes to mind as like a potential investor. And then the second thing is then from a fund manager's perspective, well, even on their own, like you've got to kind of cater for all different types of investors. Is there different kind of levels of ESG that people can potentially choose? And maybe this is even inside Vanguard or outside Vanguard, but like, is there different levels? Yeah.
Yeah, there is. So I think that's a good point. There's so many different approaches to ESG investing in the marketplace. I guess you'd probably call it the ESG landscape. And, I could probably run through, we categorize them into 5 different areas when we talk to clients at Vanguard, John. So, you've got something called advocacy and investment stewardship as such. So, you've got something called exclusionary portfolio screening or negative screening, some people might call it. You've got something called inclusionary screening, or it gets also called positive screening, which I can talk to. And then you've really got impact investing, and then what they call ESG integration. So maybe if I just run through just briefly just those areas, and then that sort of help people sort of gauge, if they're if it's a non-negotiable or like a nice to have, like you said. So when you think about, say, advocacy and investment stewardship as such, it's a key practice that all fund managers do, not just Vanguard, and it's not just on ESG funds. It's essentially across all the holdings that they have, right? And it involves what they would call, I guess, giving a voice to investors in the fund by utilizing our share ownership. So that what it means is, the more shares we own of a company, we can advocate for strong corporate governance. We can discuss ESG related issues. But the primary activities of, I guess, someone that, uses stewardship or investment stewardship is really engagement through meetings of the boards and their leadership teams, proxy voting at annual general meetings. And they use these activities, when you think about stewardship, really to ensure that companies disclose significant ESG risks, right? Because it's there's always leaders and laggards, and in this space, that they develop strategies to to reduce any risk and report on progress, because I think that's important to see that Vanguard, being an index provider, right, is always can't sell out of the index, so we've got to engage with them on a year-on-year basis and see that there's some sort of progress. And what that's doing for us is that ESG risks are material risks for the long-term shareholder value. So that's probably like for the nice to have. It's a very important piece. It probably doesn't get as much airplay as some of the others that that you'll probably hear about. Exclusionary screening, John, like as the name suggests, is involves basically excluding companies or sectors right, out of or countries or securities out of the broader investment portfolio. So they're usually based on, I don't know, specific ESG criteria. So it might be, I don't want my fund to have tobacco, weapons, non-renewable energy, fossil fuels, whatever it might be. So it's very simple, very transparent. So that one's is a good one to have in terms of it's simple, it's transparent, easy to understand. You've got what they call inclusionary screening, which is where I guess a lot of people get attracted or interested in terms of looking at, and that's proactive investment, right? So it feels like you're doing something. So it's trying to direct investment towards companies that have higher ESG ratings than, say, other companies, relative to the industry peers maybe. And inclusionary investing might involve targeting whole sectors that meet a certain ESG criteria. So it might be that you've got an Australian fund, you apply ESG ratings or inclusionary data, and you have one bank that gets more weight, or other banks that get removed, right? Because they're not doing enough on the ESG space. And then really the other two, like impact investing, to be fair, is it's becoming bigger, but this strategy sort of centers on targeting investments with what they call a dual objective. So supporting positive social or environmental outcomes while also generating a financial return, usually trying to beat the market. So for example, it could be a green bond where the proceeds may be used to help a company make its manufacturing process more energy efficient, or it could be that it could be in the equity space where they're funding something to do, I don't know, some sort of new renewable energy grants or something like that, or some sort of new technology to try and reduce emissions globally for the future. And then the last one, John, this is like they call it ESG integration. It's been part of any manager's process in the active management space for years. I often joke though, right? Like it used to be that if you were an advisor, John, and you'd meet with an active manager, the ESG slide used to be slide 15, right? Today, when you meet with a manager, it's slide number 2, right? Like it is like literally, bringing it to the front, how they make their investment decisions, and essentially assess financially material ESG information. So,
what do you think that is? What do you reckon it's changed, which is a good thing, But why do you think it's like that now?
It's probably a few things. I mean, my opinion would be we've had fires, floods, famines, COVID. COP26, COP25. There's so much more information out there now that I think people are just going, maybe this is a thing and it is changing, and that's my opinion. And then the other part, like, I think you've got kids as well. Like, I've got a 5-year-old, and you think about this more, and she's not old enough yet to say it, but like, she'll probably say to me one day, "Your generation stuffed it up. You got to fix it," and so I think there's more of us like that now too, and there's been cases where there's people taking their super funds to court to say they're not doing enough, and it really comes down to disclosure, and carbon's been admitted quite freely, right? And so with no sort of externality on it where it's had a price. So I think people are just a bit more interested.
Do you think that, and to add on to that, I think that the corporation has become more accountable. And so it was once the person only that was accountable. Now it's the corporate citizen, that we're talking about, which is, like I said, it is a great thing. When you're talking about things where, I don't know, you're, for example, trying to make sure that things are fair and equal, and that, we're not participating in things that, go against human rights. I'm saying that these are pretty important stuff. So great explanation on all of that, and obviously the different areas as well too. So it's obviously, for the individual investor, it's how strongly they feel about those certain things where really kind of those levels kind of come in. So taking that now a little bit aside, and now moving towards like the Vanguard themselves, like, what's their kind of stewardship approach? Like, what's Vanguard's stewardship approach?
No, definitely. I'll definitely answer that. I think I want, just on the corporate citizen and the personal thing, my 5-year-old, I don't know how much they learn at school, but they're always talking about recycling it. So now I've literally got native bees in our yard. I've got a worm farm in the backyard. So I always laugh. I've got 2,000 bees, 1,000 worms, and 1 dog, as a pet. But definitely on the corporate side, like, I'm definitely trying to make sure that they've got a more green base, and it's actually a way of attracting talent, right? What you're doing is really damaging the world. And when you think about stewardship and Vanguard's approach to stewardship, I think, you mentioned $7 trillion at the start. Like, I think that's US dollars. I don't know what that is in Aussie dollars, but it'd be insane, probably like 11 or something. But Vanguard's a steward of more than 30 million investors worldwide. So we invest all our assets and have a responsibility to monitor all these risks that can essentially can impact long-term value creation for the companies that we hold, right? So the responsibility is managed by our investment stewardship team. The team's pretty large now. It's like 60 people or so. And just as a side note, like 2 years ago, it was probably half that. So, it's something that's growing in our space. And they sort of operate at this intersection of corporate governance, environmental risk, and social risk as such. So, they're the team that provide the voice for investors in the boardrooms, at the annual general meetings, with the companies that we invest in. And engagement really is the most important aspect of their work. So, have the greatest impact to be able to address all those environmental, social, and governance matters, and really try and ensure companies, are managing risks and protecting the shareholder value. So maybe a snapshot would be in 2021, we just released our stewardship report. They enhanced, just with the sheer numbers of obviously growing the team, John, like, we had 1,400 plus engagements with companies. I think we voted on proposals at like nearly 13,000 company proposals, or maybe it was more than companies. So we voted on more than 13,000 companies. We voted actually on 177,000 plus proposals.
Yeah, wow.
And, you mentioned the 7 trillion. All those companies that we engage with, all those votes essentially represented 3.5 trillion of our assets. So,
wow.
It's quite hard, obviously, for Vanguard to engage with everyone. So we try and make it as meaningful as possible by engaging with the largest companies, the leaders, the laggards, where the risks are highest. And that was across 29 different countries. So if stewardship before was something that wasn't really spoken about, as much, or wasn't quite, as detailed in terms of the information you can get today, but whether it's Vanguard or anyone else, John, you should be able to get some sort of transparency on how these things work, whether it be the report or anything like that. And we provide full details of all our voting. You can hop on our website and see how we voted. We provide annual and semi-annual reports in terms of our stewardship. And what we started doing over the last couple of years, which I think is really useful, is providing case studies and insights to, company engagements and the outcomes that we try to seek on behalf of investors.
It's pretty. You're getting involved with a lot of companies there. We're talking about the amount of votes and stuff like that, and it goes to show the sheer weight of Vanguard, and that's why I asked about the stewardship, because you guys have your own role to play, and it seems to be that you guys are doing the right thing. So I've got a couple of other questions that I just want to ask you. So there's a few ESG products that obviously Vanguard have, and I kind of don't want to get into the deep of them, but in regards to is there like a full suite? Is it cover equities? Does it cover bonds? Do you guys have multi-managers? Is there a lot of options now when it comes to the ESG space?
Yeah, it's growing all the time. So I think maybe just as a scene setter, like Vanguard's got more than 2 decades of experience managing ESG strategies, and we remain committed to offering strategies as long as there's enduring investment merit there. And our ESG approach, right, is a natural extension of these values of Vanguard's core mission, which I don't know if you heard because you mentioned Jack Bogle before, right? But there's one core mission, which was to take a stand for all investors, treat them fairly, and give them the best chance for investment success. So we have a range in Australia called the Ethically Conscious range, which, they're quite large now, some of these holdings or some of these funds. But these are what we would call exclusionary based funds, John. They offer low cost, broad market exposure, where we exclude certain sectors, like I mentioned before, such as weapons, non-renewable energy, vice products, etc. But they're across Australian equities, international equities, fixed income, multi-manager, not yet.
Not yet.
Maybe let's just see what happens. But
in April 2022, there's currently none. we'll speak in a few weeks. Anyway.
Yeah, maybe not a few weeks, but speak soon, and that may change. But we're always trying to understand where there's demand and interest in terms of helping advisors. Obviously provide solutions for clients and provide choice. So nothing there today. We have a couple of active funds as well, John, that aren't ESG labeled, but integrate ESG, like I said, the page 2 versus page 15 deck, as would everyone else, and and we'll look to build upon that range, over the coming years.
When I first started, mate, there was none. Yeah, so to see where it is today, is pretty good. So when we talk about now these new kinds of ethically conscious funds, and obviously in regards to ethical investing, one of the things I do get asked is but they don't perform well, or they might not do as good as a normal index fund or whatever it's going to be. Now, without getting too much into the numbers, is that a myth, or how are they actually been going in comparison?
Yeah, so maybe I'll start here. You can look up any bit of information to match what you believe, when it comes to ESG investing online. So what I'm saying by that is, if you believe ESG produces alpha over the broad market, you can Google that and find it. If you believe that it detracts from performance, you can Google it and find it. About 3 years ago, Vanguard did its own research as well. It's US market, but it'd probably be similar globally, where they looked at all the ESG funds in the US market, whether they were active or index, looked at them if they were exclusionary or non-exclusionary products, and then looked at their return and their risk, so the performance and risk of them. When they did that, and then essentially took out style bias, sector bias, and what we call factor biases, so value growth, etc., they found that there was no relationship between ESG in terms of outperformance or underperformance. There was no clear case. So, you don't have to compromise returns when investing in ESG if you've got a long enough time frame, right? As you would when you're obviously building a retirement plan for a client.
And I do feel that over time, a lot of these funds anyway that are not labelled ESG are moving that way anyway. And so you got to think about it from an individual investor's perspective or an advisor's perspective. you also are looking these days, because it is in slide 2, about, does it have, tobacco, or is it, is it got a country that, participates in human trafficking or whatever, so it is pretty important. So that's a great summary, Ian, about ESGs. Now, 2022 has been an interesting year to start with. What I want you to just maybe share with maybe some investors is, if you had a 25-year-old, 30-year-old, 35-year-old, and you were going to share some tips with them, or even general investors at all, what are maybe 1 or 2 tips that you'd give them about investing as a whole? You've got a wealth of experience, but what would it be?
Saying I'm old, John. I'll probably couple things. You mean in terms of ESG or just investing?
Well, mate, you can touch on a couple, just a couple of general things.
Yeah, I mean, the old adage, we should have started yesterday, that's really important. Like, you need to just start, $500, 5,000, or $500,000. You need to start. We talk about at Vanguard, like, we have 4 investment principles, right? Which is goals, balance, cost, and discipline. Our goal is, have something to save up or invest for, I should say, not save for, but invest for. So whether it be retirement, a holiday, whatever else, or not sure, just start. Balance is like, don't throw all your eggs in one basket. Like, have a portfolio that is, got a bit of insurance in it, such as fixed income and bonds, and, sort of aligns with the way that you like to take risk. So it might be high growth, could be balanced, or it could be conservative, and sort of stick to that. And then we talk about costs, and, it wouldn't be a discussion in Vanguard without talking about fees, but fees, make sure the fees are actually adding value and not a drag on performance, and obviously, Jack Bogle's done a great job of talking about, keeping costs low. And, in the US, we're known as a low cost provider, and we offer index, active, and ESG funds there as well as here now. And then the last one is discipline. Like, discipline might sound boring, but it's the most important of the 3. Of the 4, sorry. 4. Make sure I can count. Of the 4, because if you can't remain disciplined when the markets go pear-shaped, like, it doesn't matter if you've got a goal, the best portfolio and the lowest cost portfolio, you'll never reach there. And I just like using just keep buying. Like, if you're in accumulator mode, just keep buying, like, whether it be weekly, monthly, quarterly, whatever it is, make a plan, whatever it is, like $400 a quarter, and just keep buying no matter what the market's doing.
I say to people, we can't control the market, but we can control ourselves. Yeah. And
correct.
This is the big one. And maybe a tip about ESGs, mate, for people that are either starting out in it or have no clue about it, like, maybe just share some tips about ESG investing. Yeah,
I mean, you probably want to ask, and maybe this is part of what you do in your role, but probably want to ask a couple of questions, like, what are some companies, what's something that's really important to you, right? That, is going to make a difference. And that might be, it might be, carbon, it might be human rights, it could be something else, and make a list, and maybe put, what's something that you don't like as well, and it could be, obviously we don't have as many of these as they do in the US. It could be guns, or it could be something else. And then from there, like, the only thing I can say probably about ESG and doing it is, do a bit of research. Remember, any product you buy will be a best fit, not a perfect fit. So it might not be that you can remove something altogether, but you can probably minimize it to an extent that, you're having a lot less impact on, where your capital's going than if you were just investing and not knowing. So it's probably just doing a bit of due diligence and research, John.
Yeah, awesome, man. Well, mate, it has been an absolute pleasure speaking to you today. And thank you very much for giving everyone your time in regards to ESGs and the world of investing with Vanguard as well too. And once again, everyone, obviously we said it at the start, but this is everything we've gone through today is of a general nature. We haven't taken your personal circumstances into consideration. If you need to know anything about that, please go seek professional financial advice where they can tailor these solutions or solutions in total to be fit to your needs. Once again, Ian, thank you very much. And to everyone listening or watching, I will see you next time. Have a great one. Cheers.